Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, the Heikin-Ashi candles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, a few weeks ago, we put out a video called Bitcoin Price Momentum Shifts Using Heikin-Ashi Candles. And interestingly enough, since then, we've seen this picked up all throughout the cryptoverse. I see these Heikin-Ashi candles are mentioned everywhere, which is great, right? We want to see looking at trends in a different way than we're used to. But we looked at this on December 28th, and one of the things we said back then was that we very much like to see a weekly candle that is no longer red. Now, if you're not familiar with Heikin-Ashi candles, I should remind you, as the slide here shows, that uptrends are characterized by large candle bodies, long upper shadows, and no lower shadows. And if you look at these candles over here, you won't see any under shadows, or if you do, they're not very pronounced. Okay, so this is how you would characterize a strong uptrend. If you look at these candles, what do you see? You sort of see the reverse of it. You see large candle bodies, under shadows, but really no overshadows. If there are overshadows, they're few and far between. So the thing that is worth pointing out, and we're going to go through a lot of different time frames on this, but that these Heikin-Ashi candles, you can almost think of them like a moving average for candles. Okay, they're not magic. It's just a way to figure out, are you going to color code the candle green? Are you going to color code it red? And it makes it a bit more visually appealing. Because if you don't use the Heikin-Ashi candles, you get something like this, and it certainly makes the trends a little bit harder to identify. But when you switch it over to the Heikin-Ashi, what do you notice, right? You see a pretty clear uptrend, you see a pretty clear downtrend, and then an uptrend, and then a downtrend, a shorter one, and then an uptrend, and then a pretty brutal downtrend, similar to what we saw back in the summer lull. So this market cycle so far has been perfect for using Heikin-Ashi candles. And the reason is because it seems like we just do one or the other for a while, right? Like we don't tend to do one for a couple of weeks, the other one for a couple of weeks, and then just back and forth. It tends to be many, many weeks of each type of candle, right? Whether it's going up or whether it's going down. Now, if you compare this to what we saw during the 2017 market cycle, it was a bit different, right? I mean, you saw green for a little bit, and then a red, and then green, and then red, and then green, red. And then it kept kind of doing this over and over, where you didn't really get a very long weekly uptrend before getting a few weeks where we were back down testing the 20-week SMA. This time, we've just seen major move up, small move down, right? Another move up, and then down. And then this one, a major move up, major move down, another major move down. So I do think this cycle has been especially good for looking at the Heikin-Ashi candles. Now, what we're going to do is we're going to go through the different time frames. Okay, so the first thing we're going to look at the daily time frame. And the reason we're going to do this is because you can still get false signals, but the larger time frame you look at, the fewer false signals that you should theoretically get. Okay, so let me show you what I mean. So if you just use the daily time frame, you'll see periods where it can be red, but it doesn't mean that it's not still in a fairly macro uptrend. Okay, so when you're using daily candles, there is a lot more noise, and when there's a lot more noise, you're gonna see these things turn red and flip back between red and green more frequently. Even over the last several months, you can see something like that played out, right? I mean, we saw some green here, we saw some green here, and here, and here, and then most recently here. But we also know that this has been a fairly nice downtrend. So while there have been a few areas where the daily Heikin-Ashi candles were green, in fact, most of them have been red, and the green ones were fairly short-lived. If you're not familiar, by the way, with how they're calculated, you can see here. So the close is calculated as 1/4 of basically the average of the open, the high, the low, and the close. The open is the open, it's an average of the open and close from the prior candle, okay? The high is the max of the high from the current candle, the open from the current candle, and the close from the current candle. And so, there's definitely is a different way to calculate it, right? And if you actually look to get an idea of what I'm talking about here, if you just quickly go back to the weekly time frame, we know the price of Bitcoin's at 41.5, but according to the Heikin-Ashi, we're actually, it shows it at 39.3. So again, it's going to calculate the close as an average price of 4 different things, not as whatever the current price is. And because it does this, it does a much better job of identifying the trend. Because if you only care about the open and the close, you're sort of picking 2 arbitrary points in time to color code whether the last 7 days have been green or red. Whereas if you pick something that's an average, you're more likely going to continue to see the downtrend. So unless the close is above the midpoint from the prior candle, then it'll be red. If it's above the midpoint from the prior candle, then it'll be green. But remember, the close is not actually the close. It's an average of the open, the low, the close, and the high. Okay, so it's an average of those 4 things. So going back to the daily time frame, you'll see a lot of false signals, right? So you'll see some false signals, but we're still sort of in an uptrend, or over here, some false signals to the upside, but we're really still in a downtrend. But the further out in time, the time intervals you make, the fewer false signals that you get. Okay, so for instance, when you look at the 1 day, there's plenty of false signals back during the summer lull that we were seeing a breakout, right? Plenty of them. When you switch it to the 3 day, the first couple of ones that gave us a signal are completely gone, and then there's only a couple that remain. So as you zoom out on time frame that you're using and you look at longer time frames, you get fewer and fewer false signals. And for instance, if you switch over to say a 5-day time frame, then you only get this one breakout as a false signal. So the point is to say, if you look at these on the shorter time frames, you're going to get plenty of false breakouts. You can even see in this most recent downtrend, we had a false breakout on the 5-day, and it continued moving down. Okay, so you really want to use these in the sense of, okay, well, what is the weekly time frame looking at? And maybe even beyond the weekly. If you go look at the weekly time frame, what does it do? It completely removes this one here, and it removes this one. So we'll switch this to the weekly. So again, when looking at the weekly, you see really no false breakout until the actual breakout came, right? When looking at, again here, you don't see, the red continues to go on until you actually had a real breakout. Now, that's not to say that you can't have a false signal on the weekly time frame. You can, and we've seen it before, in fact. So I know a lot of people are already on the phone with Forbes, and believe me, like I hope that the uptrend is cooking next week. Like I hope we're trending higher, but it would also be foolish to say that it has to happen next week. So again, hope for the best, plan for the worst. You can see there are times, when you get even on the weekly, you could get a false signal. They're fewer. They don't happen nearly as frequently, but they can happen. Okay. Normally, when you see a color change, it then leads to the other color for a while, right? So for red for a while, and we see green. We're then normally green for a while. You go back over here, right? We're red for a while. Here we had a green, but then we had a false, and then it was red, and then we had a green for a while. Here, when it switched, red for a while. Here, when it switched, green for a while. And then so on and so forth. Normally, when you see it switch, it stays like that for a while, but occasionally you do get a false break, where in the short term, it doesn't necessarily mean anything. What you really want to see is you want to see follow through, okay? So what we're looking for this coming week is follow through on this trend. So we'd like to see a green weekly Heikin-Ashi candle following this one that continues to push higher. And then we're looking at less and less likely of it being a false breakout. It seems like it could be more likely to be a real breakout. But until we see that, it does remain prudent to remain cautious, because again, just looking at what happened over here, we can still see that the uptrend continued for a little while before actually coming back down. So we're looking at something, we're looking at this weekly Heikin-Ashi candle here. In order to be a little bit more optimistic about the coming weeks, what would we like to see? We'd like to see the next weekly candle also be green and not just be, say, like another spinning top type candle like we saw here, like green red. What we don't want to see is another green red potentially. Okay, so we'd like to see another green weekly Heikin-Ashi candle. And ideally, we'd like to see a no undershadow. So we'd like to see something that looks like this, where you're basically getting no undershadows and just an overshadow. One of the interesting things is, a lot of times when you see a trend shift, you'll see a candle like this, right? Where you have a large overshadow and an undershadow, and that can often be a reversal. So we're looking at this as a potential reversal. And now I know a lot of people just want it to be one, definitively one thing or the other, right? Like just say it's either a reversal or it's not. But we do need a little bit more information. We need to see what happens next week and if we can actually push this thing back up and start a more decisive uptrend where you don't have an undershadow, you just get large overshadows and large candle bodies. I mean, imagine if Bitcoin were to push to 45K this coming week or 47K, you're going to have a massive candle body, with an overshadow. Okay, and that's what we would ideally like to see going into the next week. Now, furthermore, you can actually look at these on even longer time frames, and then you get even fewer false signals. So for instance, if you go look at, say, a 12-day time frame, which I've toyed around with a little bit, what's interesting about the 12-day is we're also looking at it on a green. We just started a new 12-day candle. And what I find more interesting than 12 days, 2-week candles. Okay, so 2-week candles tell a really good story as well. And the reason I like 2-week candles is because you don't see any false breaks. Like you don't see a false break over here, you don't see a false break over here until it actually happened. So the false signals are fewer and far between when looking at 2 weeks. So again, if you switch this back to 1 week, you'll see a false signal here and even a false one here because we had a green one following it. You switch it back to 2 weeks, this is not a false signal, right? It's still part of the uptrend. And then once it actually shifted red, we were in a downtrend. September is the exception. But more or less, you can see that looking at 2-week candles tends to be a little bit better. And where does the 2-week candle put us right now? Well, again, right now, we are in our 6th 2-week candle. Note that back in the summer lull, we had 6. Right now, we're currently in our 6th one. And this 2-week candle is not going to end this week. It's going to end a week from today. So what we're really looking for is to see on the weekly time frame another green weekly Heikin-Ashi candle to the upside. We want to see that reflected on this one as actually having an overshadow, which we don't actually have yet. Okay, so we have an overshadow on the on the weekly Heikin-Ashi, but we don't have an overshadow on the 2-week. If we get it on the 2-week, then the chances go up that it is a real signal and not just a false, a false breakout. So we'd like to see it. The longer the time frame that we see it on, the more optimistic we can be about it. If you're curious, we could also go look at, say, the 1 month, and it starts to really tell an interesting story. What do you see here? You see, look at these large candle bodies. Look at this major uptrend, right? It didn't turn red until May. And May was where things, really started a downtrend for a while. But guess what? This is why I like monthly Heikin-Ashis. The September drop in 2021, we remember September was awful for Bitcoin. But look, despite the fact that September was bad, the monthly Heikin-Ashi doesn't even care about it. It's just noise on the monthly time frame. So monthly time frames are tell an even better story because it shows you really, what is noise and what is not noise. And the September move was simply noise because the uptrend clearly continued. We're sort of in 3 red candles back to the downside right now. And right now, obviously, we still have 22 days to go before this one closes. In order for this one to close above the midpoint from the prior one, Bitcoin, the way that this is calculated, right, where it's the average of 4 different things, that needs to get up to $47,000. So there's definitely a good chance that we don't get a green monthly Heikin-Ashi candle in February. But if it moves higher, we could be looking at one, maybe in March or April, depending on how long it takes for the uptrend to resume. And then we could even go out further. We've gone this far, might as well keep on going, right? We can go look at 2-month Heikin-Ashi candles. Looks kind of interesting. It really does show a pretty compelling trend, right? You have, and going back to even say like 2017, when you look at the 2-month, you see a pretty compelling macro bull market and a pretty compelling macro bear market. And then here was our 2019 brief bull market, followed by our late 2019 brief bear market in early 2020, followed by our 2020, late 2020 and early 2021 bull market. We had a fake signal there, right? It showed up. It was fake, right? It didn't do anything. We were still over here. Here we are again. Okay, so a lot of these Heikin-Ashi candles are on the lower time frames, like on the 1 day, on the 3 day, on the 5 day, on the 1 week, they're showing strength. On the 2 week, the 1 month, we're not seeing that yet. So we want to see follow through the next couple of weeks for Bitcoin, right? So this is what we want to see. We want to see Bitcoin follow through. We want to see it get above 42K, go back up to hopefully like 47K. From there, there's like 53K and so on and so forth. And if that happens, what you're going to see is you're going to see all of these things following kind. And then the higher we go, and the longer we spend at higher prices, then I think the more likely it is that it's a real breakout. But unfortunately, until we get more information and see an actual uptrend start on the weekly, then we have to remain cautious, okay? So I like the Heikin-Ashi candles. Again, we introduced them on the channel on December 28th. Since then, it seems like everyone has been talking about them. But I also want people to remain grounded and recognize that this is the start of what we want to see. It's not all we want to see. It's the start of it. And what we want to see is large candle bodies, overshadows, and no undershadows. So until then, is certainly, I mean, you should always be cautious in crypto, but until then, be especially cautious because we want to see it come on larger time frames. Just because I know people are probably going to ask, we can look at this on the 3-month time frame, and you can see that the last, I mean, we are in one right now. This started in January. You can see we are in a red 3-month. The last time we were in one was back in late 2019 and early 2020 was the last time we saw it on the red. But even here, even on this one, you are seeing at least an overshadow. So it's not just a large candle body with no overshadow. It actually does have an overshadow. So there is some fight going on, right? It's not a clear downtrend by any stretch of the imagination. And then going further out, you can look at 6 months. And eventually, you know, what's interesting is eventually it really, even though we talk about market cycles and stuff, eventually when you go far enough out, the market cycles do start to look somewhat irrelevant as long as you have a long time horizon. Like going and looking at 12-month candles, look at this, right? It's like you could just say, well, what bear market? It's just been in one macro bull market with a couple of false signals of 2015 and 2019. You might wonder, why is that? Well, again, it's because you can think of Heikin-Ashi as sort of a moving average of candles, and it is in fact a lagging indicator. So you can see sort of 2 false signals on the yearly, but we just continue the trend following that. And right now we are in 2022, and I mean right now we're looking green, right? We're still looking relatively green. You can see we have a lower bound here at around 28K. Currently, we're at around 41.6K, and we have no undershadow. So no undershadow at this point. We also did not have an undershadow in 2021. We did not have an undershadow in 2017. We did have one in 2018. Obviously, it's too early to know if we're going to have one in 2022. So hopefully you guys like the content on the Heikin-Ashi candles. It seems to be somewhat popular now. A lot of people are talking about it. So I just wanted to go back to the drawing board and say, look, this is what we want to see. It's a step in the right direction, but we still want to see follow through, and we want to see large candle bodies. Okay, so the 3 things, right? We want to see large candle bodies, long upper shadows, and no lower shadows. Until we see that, then we can't really definitively say that Bitcoin is in an uptrend. But we could maybe say that if we start to see those candles over the coming weeks. So if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. We also do have the Into the Cryptoverse NFT. I believe there's maybe 55 copies left, I think, of one. The other one sold out. There's 55 left of the other one. Whatever's not gone by February 8th will be burned. And if you hold both of them that we've mentioned over here the last few days, on May 3rd in a single address, and you can claim a third Into the Cryptoverse NFT for free. So if you want information on that, check out the description below. Thank you guys for tuning in. Subscribe, and I'll see you next time. Bye.